Saturday, 16th of December, not long till Christmas. I've been asked to have a look at gold primarily today. I know it's one of the favorite markets that I cover, and it has been so confusing. So I'm not surprised I've had a lot of requests to do a video on gold. Here we go. So we had the big bearish engulfing candle and the long upper wick on the daily chart. We had one on the weekly chart last week as well. It did indicate that gold would go down quite significantly. So I was sticking with that bear trend. And we hadn't really hit all my downside targets. I really did think we could get to 1945, 1940 after that. And we were moving quite nicely to the downside. Anyway, we covered our shorts at the target, the first target anyway, around 1975. That worked quite well. Then we had the FOMC and Chairman Powell with their interest rate decision and press conference afterwards. And in that, Powell basically did a U-turn on the outlook for interest rates. Instead of saying higher for longer, said the reverse, and that they're looking for a 75 basis point cut in 2024, which is quite an aggressive U-turn. The markets are now, I believe, pricing in something like a 150 basis point rate cut next year. This is a very different outlook to where we were maybe even only 2 weeks ago. What can I say about the chart? We've been just jumping around all over the place, but we're in the same area that we were back in April, May. So we haven't actually made any progress in either direction. We've gone down a bit, we've gone up a bit. 2018 is below the peak in April and May, and it's above the low in May as well. It's just above the peak in July and August, just testing the peak of October. We're not going anywhere. Now, on Wednesday with the FOMC, we had this huge bullish engulfing candle. So we had this massively negative candle on the daily chart. And as I said to you before, I don't tend to base my outlook on one candle, even on the daily chart, which is a relatively long-term chart for my analysis. I don't tend to change my outlook on one candle, but I had to because it was such a significant candle. And yes, we did go down quite significantly from there, dropping to, what was it now, 1972. So we definitely hit my first target on the downside. Worked really well. And then we got this bullish engulfing candle and took out 1, 2, almost 3 days of significant losses. In fact, this was most of the loss after we had the bearish engulfing candle. It was after that I was looking to sell into shorts and capitalize on a move to the downside. By the close on Wednesday, we recovered almost all of that move to the downside. So if you're a confused gold trader, I can fully understand. Massive bullish engulfing candle. I have to pay attention to that. And then we continued up on Thursday. But on Friday, then we pulled back quite significantly. And I don't really know the reason why we pulled back below Thursday's low. So yes, I'm going to admit I'm confused. I mean, who wouldn't be looking at this chart? There is no clear trend. There is no clear pattern. Yes, I can say we have been in a bull trend for 1 year, but we keep having these very deep pullbacks. If I'd have told you back when we were trading at 16.15 that we're going to go to 21.35, could you really have held that long position? I doubt it very much. Even if you'd managed to hold it all the way up here, anyone with a trailing stop would have been taken out as we moved back to 18.15, and then we went up. But even that up move was jumpy all over the place. So if I'm going to make a forecast now, I think I'm going to stick with the bulls because the longer term trend is bullish. We are trading above the moving averages that I monitor on the daily chart. We have got the bullish engulfing candle. We have got that U-turn in interest rate policy from the FOMC. I think I have to stick with the bulls right now, but it's clearly not going to be an easy ride. Despite oversold conditions, we saw a significant sell-off. I had a buy level at, I think it was 2030 down to 2025 with a stop below 20. I really didn't expect us to be back below 20 by Friday night, and we were. So the long trade did not work despite oversold conditions. I'm going to have some buy levels on my trade sheet beginning of next week. And that is really all I can say. When you look at the price action for December only over the last 2 weeks, we are in that bear trend with a big recovery. We'd managed to beat this high here, this little swing high, and all the fib levels around 38.2. So it really did look very positive. And then we've just turned around and gone down. It is tricky. I can't rely on the levels on this hourly chart. I wouldn't be suggesting along around the 2015, 2010 level. I don't think. I'll go into it in more detail before I write the report for Monday. But the hourly chart isn't helping me at all. And looking at the 4-hour chart for gold, I can tell you that that is no help whatsoever either. So it is a difficult time. Silver, that's the hourly chart. If you can make sense of it and see a trade opportunity, do let me know because I can't. Silver is actually more difficult to read than gold because on the daily chart for silver, as you can see going back 1 year, that could not be more of a sideways pattern. We are exactly where we were 1 year ago, having gone up a bit and down a bit and all over the place, but we haven't gone anywhere. We're priced at exactly the same level 1 year ago. Let's have a look at oil, which is exactly where we were trading 1 year ago. Look, what date is this? This is 1 year ago, the 9th of December. WTI crude, the US contract, is exactly where we were 1 year ago, having moved up a bit and down a bit. So again, no clear trend or pattern for me to trade on oil. I've littered the chart with trend lines to give me some idea for a low risk trade opportunity, but I can't see it. So I have been focusing on the short-term charts. The 1 hour chart is the one that I have to focus on because at least there is something of a trend, even though that trend finished at the beginning of December, finished a week ago, because since then we've only traded sideways again. I have a negative outlook for the dollar, which is one reason why I'm thinking gold will eventually climb and probably silver too, despite the setback on Friday. The dollar index has been in a bear trend since the 1st of November. So you're looking about a data lasting for about a month and a half on this 1 hour chart. And you can see we're clearly in a downtrend. We have that policy from the FOMC, which I think will keep the dollar under pressure for now if we're expecting lower interest rates. So unless we have a sudden pickup in economic activity, sudden drop in unemployment, or a sudden pickup in CPI, PPI, something like that, I think that the outlook will remain quite negative. The market is expecting even more rate cuts next year than the Fed has even projected. So for now, my strategy will be to sell the US dollar on any strength. Having said that, that isn't making trading the euro any easier. We shot up from the beginning of November, then we had a big retracement at the end of November, beginning of December, then we rocketed up. And even on Friday, despite that FOMC reversal, we didn't manage to beat the November high. We've turned around and collapsed and dropped over 38.2% of that move up from the 8th of December. So this is just such a confusing mess. The dollar is in a bear trend, at least in the short term, and it is certainly in a bear trend against the yen, which is showing considerable strength against other currencies as well, as the market speculates that the Bank of Japan will become more hawkish in 2024. Well, let's have a look at the daily chart. Dollar yen had a big move up, a big retracement down at the end of last year. From January, we had the recovery to retest the 2022 high for the dollar versus the yen. And of course, we've reversed. Now, if you watch my video a month or so ago, you'll have seen me call a top here. I think I did it in a live webinar actually, and the market did reverse. If you watched that webinar and you did sell, you've done extremely well. The dollar has been in a bear trend against the Japanese yen ever since. It was a brave call considering we were in such a longer term bull trend. I think this has to continue. I think this is probably one of the best bets that I can suggest. Short dollar yen, it is working. Obviously, we do get these bounce backs. That's perfectly normal, especially in the early stages of a bear trend. You're going to get sharp bounce backs, but as long as those bounce backs don't beat the previous peak, it means we are in a bear trend. We've now broken and closed for the first time the day and the week below the 200-day moving average and the fib levels that are around 142.50. So we'll see how far down we can go. Okay, that's it. It's a bit of a brief outlook, but just to give you my overview of where I think the markets could go over the Christmas and the New Year period.